Equifax Business Revealed. Equifax is the oldest and largest credit bureau in existence today. They were originally founded in 1898, 70 years before the creation of TransUnion. Two brothers, Cater and Guy Wolford, created the company. Cater actually got the idea from his grocery business, where he collected customers' names and evidence of creditworthiness. He then sold that list to other merchants to offset his own business costs. The success of this tactic led Cater and his attorney brother Guy to Atlanta, where they set up what would become one of the most powerful industries in existence today. The retail credit company was born, and local grocers quickly started using the Wolford service, which expanded rapidly. By the early 1900s, the service had expanded from grocers to the insurance industry. Retail Credit Company continued to grow into one of the largest credit bureaus, by the 1960s having nearly 300 branches in operation. They collected all kinds of consumer data, even rumors about people's marital lives and childhoods. They were also scrutinized for selling this data to just about anyone who would buy it. Throughout the 60s, Equifax continued to provide credit reporting services, but the majority of their business came from making reports to insurance companies when people applied for new insurance policies, including life, auto, fire, and medical insurance. Almost all major insurance companies were using RCC to get information on the health, habits, morals, finances, and vehicle use of potential insurees. Equifax also provided companies with services including investigating insurance claims and making employment reports when people were seeking new jobs. Back in the 60s, most of Equifax's credit work was actually being done by their subsidiary, Retailers Commercial Agency. In the late 60s, Equifax started to compile their data onto computers, giving many more companies access to this data, if they chose to purchase it. They also continued to buy up many more of their smaller competitors, becoming larger and also attracting the attention of the federal government. They began to earn a bad reputation for selling data to anyone who wanted it, whether or not the data was accurate. Equifax was gathering details about people, including their marital troubles, jobs, school history, childhood, sex life, political activists, and more. There was no limit to the kind or amount of data they were collecting. Some of the information was factual, while large swaths of the rest were completely false. Some information was literally no more than rumors. Equifax was even said to reward their employees for finding the most negative information about consumers. In response, when the U.S. Congress met in 1971, it enacted the Fair Credit Reporting Act. This new law was the first to govern the information credit bureaus and regulate what they were allowed to collect and sell. Equifax was no longer allowed to misrepresent itself when conducting consumer investigations, and employees were no longer given bonuses on the basis of the negative information they were collecting, the standard practice in the past. Retail Credit Division was charged with violating this law a few years later, causing even more government restrictions to be implemented. Scarred with a bad reputation for violations of the new credit laws, the company changed its name to Equifax in 1975 to improve its image. Throughout the 1980s, Equifax, Experian, and TransUnion split up the remaining smaller credit rating agencies between them, adding 104 of those to Equifax's portfolio. Equifax aggressively grew throughout the U.S. and Canada, and then began growing their commercial business division across the U.K. At this time, Equifax started competing more aggressively with rivals Dun and Bradstreet and Experian. They then continued to grow, taking a lining with CSC Credit Services and another 65 additional bureaus. The insurance reporting aspect of Equifax's model was phased out. At one stage, the company also had a division selling specialist credit information to the insurance industry, but they spun off this service, including the Comprehensive Loss Underwriting Exchange, or CLUE database, as ChoicePoint in 1997. ChoicePoint formerly offered digital certification services, which it sold to GeoTrust in September 2001. Equifax has continued to grow, now maintaining over 401 million consumer credit records worldwide. They also expanded their services to direct consumer credit monitoring in 1999. Today, Equifax is based in Atlanta, Georgia, and has employees in 14 countries. They are listed as a public company on the New York Stock Exchange, NYSE, under the sign EFX. Since its inception, Equifax has operated in the business-to-business sector, selling consumer credit and insurance reports and related analytics to a wide array of businesses worldwide. Equifax reports are still commonly used by retailers, insurance firms, healthcare providers, utilities, government agencies, banks, credit unions, personal finance companies, and other financial institutions. Equifax provides business credit evaluations for small businesses and corporations, allowing them to detect early signs of trouble by monitoring key customers, suppliers, and partners. Equifax offers a business scoring credit scoring model known as the Equifax Small Business Enterprise. Equifax's model is designed for companies that provide goods and services to small businesses. Equifax's source of data today is still some of the most vital information used by credit grantors to decide what sort of products or services they offer to their customers and at what terms. Equifax's system for collecting data is NCTUE, an exchange of non-credit data including consumer payment history on telco and other utility accounts. Today, Equifax is one of the major credit reporting agencies used in many countries. Some of the countries where Equifax is mainly used include Canada, Chile, India, Mexico, Peru, the United Kingdom, and the United States. Equifax provides business credit monitoring and credit alerts. There are many different types of alerts they provide to warn you of changes on your credit profile. A bankruptcy alert is given when any new bankruptcy event has been reported. A derogatory item alert is given when a judgment, lien, delinquency, charge-off, and delinquent amount greater than or equal to 60 days past due has been reported. A new inquiry alert is issued with any new inquiry that's made on the Bureau report. The Equifax Score Drop Alert is issued when any negative credit risk score change of 20 points or more occurs. Unlimited Bureau reports are available from Equifax for the life of your subscription with them. They offer their reports and monitoring for about $19.95 monthly. Here is a look at what these types of alerts look like in the Equifax Small Business Member Center. Equifax reports also list company details including name, address, phone, fax, Equifax ID. Credit utilization details are also included, such as utilized amount, available credit. Equifax reports also list days beyond terms, inquiries, bureau messages, credit scores including credit risk score, payment index, business failure score. Equifax reports include a bureau summary section which lists number of accounts, credit active since, charge-offs and past due, most severe status in 24 months, highest credit extended, current credit exposure, median balance, average open balance, recent new accounts and inquiries, recent delinquent accounts, recent account updates. Equifax reports also list public record data such as BK, judgments, satisfied or not satisfied, liens, filed and opened or released. And additional information is also listed including alternate company names, owner and guarantor names, business comments, reported generated date. Any business registration from the Secretary of State is also listed including a bankruptcy filing, a judgment, a suit, or lien. Equifax primarily acquires its information from two primary sources: First, all of its financial information is obtained through an exclusive data sharing agreement with the Small Business Financial Exchange Incorporated, or SBFE. The Small Business Financial Exchange is a nonprofit organization made up of the largest small business lenders in the U.S. and consists of information on a wide variety of credit products including term loans, lines of credit, credit cards, leases, and SBA loans extended by financial institutions. The majority of the financial institutions are banks and equipment leasing companies. Second, Equifax also acquires Net 30 type industry trade credit information from a wide variety of suppliers that provide products and services to business on an invoice basis. Equifax combines the financial data with the industry trade credit data along with utility and telephone data and public record information, bankruptcies, judgments, and federal and state tax liens to create an extremely robust, current, and complete commercial credit database, Commercial Small Business Credit Bureau, in the U.S. Equifax's aggregation of SBFE trade line performance data with public record, firmographics, Secretary of State, and other data elements have made its commercial database the de facto standard for doing business with the small business market. One of the first actions that a new small business owner does is open a small business credit card account, contract with a telephone provider, and engage a utility provider for water, electricity, and gas services. Because of Equifax's data gathering activities in all these key market segments, over 99% of the businesses in the Equifax commercial database have credit experiences. Equifax requires that companies within the financial services industry have a minimum of 500 customers to report to them on a monthly basis. Companies within other industries, non-financial services, must have a minimum of 2,000 customers to report to Equifax on a monthly basis. Equifax offers a few main business credit scores. The credit risk score predicts the likelihood of a business incurring a 90-day severe delinquency or charge-off over the next 12 months. The business failure score predicts the likelihood of a business failure through either formal or informal bankruptcy over the next 12 months. The payment index provides a dollar-weighted index of a business's current and past payment performance based on all payment experiences in the Equifax commercial database. The Small Business Credit Risk Score for financial services predicts the likelihood of a business incurring greater than 90 days severe delinquency or charge-off on financial services accounts within a 12-month period. This score is built using financial services and trade payment data, providing a higher degree of predictability. The score range is from 101 to 992, and it returns up to 4 reason codes. 0 indicates a bankruptcy. The Equifax Business Failure Score predicts the likelihood of a business failure through either formal or informal bankruptcy within a 12-month period. The Equifax Business Failure Risk Score is built using financial services and trade payment data, providing a higher degree of predictability. The score range is from 1,000 to 1,880, and it returns up to 4 reason codes. 0 indicates a bankruptcy. The payment index value is a dollar-weighted indicator of a business's past and current payment performance based on the total number of financial and non-financial payment experiences in the Equifax commercial database. On the report, there is a chart shown that provides a suggested interpretation of the payment index value. Equifax's proprietary model for business credit scores looks at many factors to derive the score, several of which are not displayed on the summary report. Factors include, but are not limited to, an increased trend in delinquency, the presence of derogatory public records on the business profile, such as liens, judgments, and bankruptcies, an increase in the number of credit inquiries, the number of accounts on file, balances outstanding, payment habits, credit utilization, related trends over time. Equifax provides a dispute process to address any perceived inaccuracies on the report. The dispute process is not intended to provide the business an opportunity to dispute and request the removal of accurate historical information, positive or negative, about the business. Only that information contained in the public records in the Bureau data sections of the report may be changed as a result of a dispute. You have the opportunity to provide a statement of explanation that can be added as a comment to the report. The comment may be reviewed and/or used by recipients of a business report to help understand your business's past history. Equifax may require supporting documentation. You must have credit monitoring with Equifax to file a dispute. Disputes are filed in the Member Center by clicking Contact Us. A research request form must be completed. Once the research form is complete, Equifax sends it to the reporting agency to verify. Changes can take 45 to 60 days. You can also purchase business credit reports for other companies other than your own. These reports cost $49.95 for one report or $399.95 for 5 reports. These reports include a bureau summary of financial and non-financial accounts, a public records section which lists any Secretary of State business registration, judgments, liens, or charge-offs reported. 2 credit scores are listed, including the Equifax Credit Risk Score and Equifax Business Failure Score. Payment trends and the payment index are also listed, which is a 12-month payment trend and a comparison to industry norm. Equifax also offers several marketing services, which include Equifax Decision 360. This service helps determine which consumers are better candidates for credit. It also provides a complete assessment of consumer payment history, individual and household income or assets, and debt levels. And it helps you to know which customers are actively in the market and can more likely afford your products and services. Equifax Decision 360 lists credit information, income or employment verification, asset or property data, telco and or utility payments, credit capacity scores, demographics, macroeconomic trending, custom modeling or analytics of your own account data. Equifax offers other services which include EFX Link to search customer database for business owners, business-to-business marketing lists for business data and analytics, customer data management, which keeps databases up to date, new business hot list, which is access to a weekly list of up to 40,000 new businesses. Other Equifax services include Risk Filter to identify and rule out high-risk customers, business principal reports, which get report info on the business owner, supplier evaluation products, which evaluate risk for suppliers. Contact us today to learn more.